What's up guys, welcome to another video on the interbank speculators. In this video I want to be going over determining low versus high probability conditions. So let's get straight into it, let's get into the good stuff. So first of all, we have to get into a little bit of theory on defining low and high probability conditions. And then we'll go over some examples as well. So first of all, how do you define low and high probability conditions? Well, low probability is when price action is not one-sided, and high probability is when price action is one-sided. And what I mean by that, one-sided simply means that you can only make the case for buy or sells and not for both at the same time. Low probability means when if you're looking at price action, you can say, well, I can potentially see higher prices, but I can also see this scenario, so I can also see lower prices. That is low probability conditions. So when you're looking at high probability conditions, you're looking at the charts and you're saying to yourself, I can only see lower prices over here. I cannot make a case for higher prices or vice versa. So this is why if you are trading in high probability conditions, you should know beforehand to only focus on either buys or sells. So say you check the charts before you go to bed, and then you wake up for either London or New York session, depending on where you live. You should already know whether you are focusing on buys or sells if you are truly trading high probability conditions. Because if you have to figure that out later, or you're constantly switching between I want to go short, I want to go long, chances are you are in low probability conditions, maybe without you even knowing it yourself. So it's important to know that there is no in between. So there's no low, high probability or semi-probable conditions. So if you are uncertain or in doubt, it's better to sit still and wait for the markets to show you its hand when it's one-sided again. Important to know as well that over time, when your price reading skills and your understanding will improve, your filtering process will be better and you will be better at looking at charts and determining whether it's a low or high probability conditions. This is not something you can learn by watching one video. Even though this video will probably help you a lot, you're not going to be able after this video to determine every low or high probability conditions. It's something that you just need to develop with patience and experience as well. Also important to mention that sometimes you just don't know what is going to happen. You can make a case for anything, and that's sometimes that's just not because you don't know enough or you're not seeing anything. Sometimes the markets are just not providing you more information, and it's not your fault. Even ICT sometimes himself sometimes doesn't know where a price is likely to go. So it's not that there's something wrong with you if you don't know, if you can't see what's going to happen. 70-30 is still not high probability, in my opinion, just to put it out there. In my opinion, it should definitely be 90-10 or higher for it to be truly high probability. And what I mean by that, say 90% buys, 10%, you can only see 10% sells. That is high probability. If you can say you think 70% chance it's going higher, 30% chance it's to draw lower, that's not high probability, just to put it out there. Some time frame alignment, which is also important to mention, because if you are a scalper and the weekly is low probability, you can obviously still trade because you don't need the weekly time frame as a scalper. Yeah, it can help, but if the weekly can be is conflicting, or you don't know where the weekly is likely to expand to, you can make a case for either buys or sells on the weekly. You can obviously still trade intraday sessions. Likewise, if you're a swing or position trader and the hourly chart is low probability, you can still trade. Some general rules of thumb. If you are trading the weekly range, the weekly time frame, daily and 4-hour all need to be one-sided. If you're trading the daily range, preferably the weekly as well, daily, 4-hour and hourly charts need to be one-sided. If you're scalping, daily, 4-hour and hourly and lower time frames like a 30-minute need to be one-sided. So these are some general rules of thumb. I'm not saying you need to take all these time frames into consideration, and all of them need to be lining up. But the more time frames line up, the higher probable your trade is. So it's just something to keep in mind. Let's go over some examples. First of all, I want to show you how high probability conditions look and what multiple time frames being one-sided actually looks like. So this is an oil weekly chart, pretty recent price action as well. And over here you can see this weekly chart being one-sided to draw lower. Why is this one-sided to draw lower? As you can see, we have a clear target below us, this inefficiency, and there is nothing above us anymore which has to be rebalanced. There's no inefficiencies over here. This is an immediate rebalance. There's no buy-side liquidity pools over here which have to be taken out before we can draw lower. And institutional order flow is bearish, as you can see. We've had 3 down close weeks in a row. We're trading through discount arrays. This fair value gap over here is failing. We are showing speed. We are having an immediate rebalance over here. So this weekly, in my opinion, is one-sided to draw lower, and I cannot make a case for buys in here. I don't see a reason why price should go up over here anymore. Remember, price only draws towards inefficiencies or liquidity, and this should be the obvious one-sided drawn liquidity in this scenario. Let's go to the daily chart. This daily chart is also one-sided. Why is that? We are in bearish institutional order flow. Up close candles are resisting price down lower. We created a fair value gap over here, which we almost completely filled in, as you can see. And now we're displacing down, trading through this small inefficiency over here. And we have clear equal lows resting below us and the weekly fair value gap below it as well. So this is also one-sided to go lower, and I cannot see a reason for price to go higher here as well. 4-hour time frame, as you can see, also one-sided. We are respecting this fair value gap. As you can see, the bodies are respecting the premium high. Discount arrays are failing. As you can see, we're trading through this fair value gap. The order block over here, or mitigation block, is not holding price as well. So the 4-hour should draw lower as well. Hourly chart is also showing one-sidedness to go lower. We have the fair value gaps resisting price lower. The bearish order blocks are resisting price lower. We have these clear equal lows left behind. There's no reason to go up anymore. Everything is rebalanced already, and there's no liquidity pools that have to be taken out. So this is a classic example of high probability conditions, where you can see that all the time frames are telling the same story and are one-sided. So I want to show another example, and I want you to pause your video over here and see for yourself if you think this is high or low probability on this daily chart. Okay, let's get into it. So this is the first scenario I could see over here on gold. It was a gold chart. Is a higher prices on gold, because we are finding support on this bullish order block. There's a fair value gap over here. We traded down to the discount low. We even took out this low over here. Now we're sitting on top of another order block, and from here we could go higher and run out these buy stops. So this is a scenario I could see, but I can also see this scenario for the same gold chart. This is the same gold chart, slightly more zoomed out, so it doesn't look the same, but it is the same chart. As you can see, I can also make a case for lower prices, because this is your dealing range. As you can see, we are up in premium of the dealing range. We have another smaller dealing range over here, where we just traded to premium into this inefficiency over here. We took out this high as well, so I can definitely see lower prices as well into discount of the bigger dealing range. Say this fair value gap, for instance. That could be a drawn liquidity. So as you can see, we are having conflicting views. I can see both higher and lower prices on this chart. So this is a classic example of low probability conditions. So if your chart ever looks like this, it's better to sit still and wait for one-sidedness again. For instance, if we trade up and close above this fair value gap, that would, in my opinion, be one-sided again to run the buy stops over here out. Or likewise, if we trade down through this order block, that would, in my opinion, be high probability to go lower, to run the sell stops here into this inefficiency. But as of right now, anything can happen, and this is basically 50-50, low probability. So you either wait or you go to another asset, another pair, and not trade this. Now I want to look at an example where the time frames are conflicting. So let's go back quickly to the time frame alignment. As I said, preferably you want all the time frames to be one-sided and supportive of each other. So for this example, we'll be wanting to trade the daily range. Our weekly and daily charts are one-sided, but the 4-hour and hourly are conflicting. Let's get into the example. So this is a CAT JPY chart on the weekly. This weekly is one-sided in my opinion, because we took out sell-side liquidity, our top of this order block or propulsion block, whatever you want to call it. As you can see, the bodies are respecting it rather handsomely. We are inside of a bullish inversion fair value gap as well. And from here, we should likely expand higher into the rejection block and the buy side liquidity over here. So this weekly is, in my opinion, high probable to go up. The daily chart is also one-sided for higher prices. Took out the sell stops over here like I outlined on the weekly chart. We are finding support inside of this fair value gap, basically a balanced price range as well. If you look at this inversion fair value gap over here, we're currently sitting on top of this bullish order block or propulsion block because we dug into this candle as well, and we have clear buy stops resting above us. So this should be one-sided to go up, and I don't see a reason here for price to go lower because sell stops are already taken out. This is already effectively rebalanced. We have an order block over here. There's just no way, in my opinion, this goes down. This should be one-sided. But when we get to the lower time frames, you can see some conflicting signals. This is the 4-hour, and as you can see, this fair value gap is failing, this discount array, and we're not really finding any sensitivity at this order block as well. We're basically in the middle of our dealing range. So from here we could either still go up or we can make a run for the sell stops. This is the hourly chart and this is the 4-hour fair value gap. It's important to remember that because we'll get back to this later. As you can see, this hourly actually looks pretty bearish because we are currently trading inside of this fair value gap, bearish order block as well. So you could well make the case for lower prices, but also for higher prices because there's a lot of price and liquidity over here. So this hourly chart and the 4-hour chart are conflicting. The weekly was high probability to go up, daily is also high probability to go up. 4-hour is low probability and the hourly is low probability. So in a scenario like this, you want to ideally wait for the hourly and the 4-hour chart to shift to one-sidedness again and then enter your day trade to avoid getting unnecessary losses. For instance, I would want to see this happen before I want to enter. Why? I want to see a change in the state of delivery, which is when we trade above this bearish order block and violate this dealing range and above the 4-hour fair value gap again, and then I would be confident to go to buy, to go long on this pair again. So basically what it says over here, the hourly is not one-sided. If you want to be a day trader or scalper, wait for the change in delivery, which is this run above the order block, and then enter. This price action could chop you up and still run sell side. So this is basically what happens if you are impatient and you don't wait for the hourly and 4-hour to be in line with the daily and the weekly again. As you can see, we, for instance, if you entered on, you saw this order block over here, where we traded above it, and you entered over here on the order block, with your stop below this low or this low, you would get stopped out, would have taken a necessary loss. Or you could have entered on this fair value gap, put your stop here, then maybe you would get a small partial, but you would still get stopped out. So instead of entering over here, wait for the hourly to be in line with the other time frames. Like this. Like I outlined earlier, I wanted to get above the fair value gap and the order block, which we basically did over here. We left behind a fair value gap over here, so you could enter on the fair value gap, put your low, below the fair value gap or below the bodies of the order block over here, and then you would have hit TP. Obviously, these charts are hindsight, but I just hope you get what I'm trying to say here is that it is important that if you are either day trading or scalping, that the lower time frames are lining up with the higher time frames as well. Because even the weekly and daily can look very nice and one-sided. If the hourly and 4 hour are choppy and you don't know what they want to do, you are still likely to take unnecessary losses if you try to scalp or day trade in those scenarios. So that's just important to remember. Ideally, all time frames line up, like the example on oil I showed earlier. So I hope you found this video helpful. If you did, please subscribe, like and share the video. And I wish you good luck and good trading.